Should you buy foreign real estate or not? This is the question that we're going to answer in today's video. And I want to reflect on my very personal experience that just happened recently, just right now, in fact. And so I want you to get useful information. I want you to be able to make the right decision for yourself as to whether you want to buy foreign real estate or not. And we're going to be unturning many stones here. We're going to be talking about the reasons for buying, potentially some assets you invested in the past are no longer as hot. The bull run has ended. And then, of course, also you want to consider your own personal plan, your own personal future. Maybe you want to live there, you want to, operate an investment property, whatever the reasons are. So hopefully we'll get a ton of value out of this video. So let's get started with the first point, which is, of course, why you want to invest in foreign real estate. And this is a pretty broad question to answer because the reasons are different for each and every one of us. Let me start now talking about a little bit about me. Don't want to talk too much about me, but I still want to talk about why I decided to buy foreign real estate and what the catalysts were that led to this decision. First of all, I was just looking to do something with my cash. And the reason for this is pretty obvious. Having cash in the bank doesn't really pay you dividend, unless, you have a very special deal. But it's difficult to get some kind of return by having money in the bank. These are no longer the 50s, the 60s, the 70s. No, these times are over. It was pretty good until about 30 years ago, and then it all went down the tubes because there's just so much more money today, and that's a problem. It's not really money, it's currency. But anyway, so I wanted to do something with my cash, and I just felt like it's a good idea to buy an investment property in a country where I know I can live, where I know I can become a citizen, where I know I'm protected. And this is very crucial, right? Because a lot of the times people want to buy properties, whether that's for personal use or they want to turn it into an investment property. They want to buy the property in a country they like. They like vacationing in that country. They like spending time in that country. That's all nice and good, right? But the question is really, what purpose does the property serve? And basically, there are only two purposes, in my humble opinion. It's either for yourself, so you don't care about the profit at all, or it is about the profit and you don't care as much about yourself. Okay, there are two scenarios here, right? And so, of course, you can combine the two, meaning you can live in the property for a couple months a year and rent it out for the remaining time. That's an option too. And so we're all different. And so for me, what I'm going to do with my property is that I want to spend some time in this property, a couple months a year, and then I rent it out. That's my decision. And if for whatever reason, sometime in the future, I decide I'm going to live in Latin America full time, or I'm going to live in Africa full time, or I'm going to live in Eastern Europe, whatever I want to do, I can just rent this out. I can turn this into a vacation rental because where I purchased is a place very conducive to that, and there's a lot of traffic year round, and so it's good. So I considered all of this, right? And so when you want to buy an investment property, you really got to consider, obviously, the purchase price. Yeah, and I've said this already before, the money with an apartment, with a house, don't make it when you sell it, you make it when you buy it. And that's a paradigm shift. Like, you want to make sure that when you buy a property, you buy it below market value. That's really the most important thing. Or you get fair market value, that's fine too. But it's really important that wherever you buy the property, there's a high chance that, the value will increase. Why? Supply and demand, the good old formula, it works. Also here, supply and demand is very important in real estate. And what's also important is the growth in that city, or in that area where you're looking to buy. Are people moving to that area, or are people moving out of that area because it's becoming more dangerous? For whatever reason, people are moving out, right? So consider really all of this. If you want to have it as an investment property, and I want to highlight this again, because if the property is for your own personal use, then it's a different story because you might not want to care about that. If you want to live there full time, and then the most important thing is that you feel comfortable, that you feel at home, and that you live in a place that reflects your life's vision and goals. If you want to live in a place that's tax friendly, and you just don't want to keep moving, rotating back and forth between Airbnbs or just finding a new apartment every now and then, you don't want to do that. I totally get it. So you want to buy a place where you can stay full time, whether that's 9 months a year because you want to travel, you still want to travel a couple months a year, or you want to live there permanently, right? People have different reasons. So if you have, if this is your goal to live full time, then the investment side of it is still important, but not as important. You still want to make a good buy. You don't want to make a bad buy, but still. So that's really important. So to me, like I said, it's an investment property, and it's also for my own personal use. I'm going to be spending some time here, but not all year, because I have some really cool things planned, and so I think that's really important. What you really want to focus on now is actually so foundational, and that is how you approach investing. And how you approach investing really depends on yourself. So what's important here is that when you take a lot of risk in your business, okay, and you're like, okay, this is the risky leg of my life, I'm taking risk in my business, I'm building this business, I'm injecting capital, I'm building different traffic sources, I'm building marketing funnels, I'm doing all these things, okay? So this is the risky aspect of my business. You have this, right? This is your work, this is your profession, this is your business. So typically a business is risky. Even if it's an online business, it's still risky for different factors. Let me give you an example. I have a marketing agency, and back in 2020, it was mainly predicated on clients from a specific geographic location that suffered tremendously during COVID. We're talking about California here, okay? California had pretty strict COVID regulations. And so we were working with personal injury attorneys, and they had to shut their offices, and so they couldn't accept leads anymore. And so we could not send them any more leads. And the problem is that my clients, or our clients, were based in that specific state. Why? The state has the most volume. That's where we build our web properties, and so the traffic flew there. We've set it up in a way that we focus on that specific state only. I don't think it's a huge mistake, because I was able to take out a lot of money, and I would not have been able to take out as much money had I focused on other states. Why? Again, it's volume based. Okay, Texas would have been good, Florida would have been good, right? And we had some in Texas, but the majority was in California, and that's just how it happened. And so the government forced them to shut their offices, so they couldn't accept any leads. So that's why I'm saying business is luck. There is some luck in business. You can start the right business at the wrong time. If you started the right business during COVID, you may not have made any money at all. In fact, you would have lost money if the government forced you to shut the business. And now you say, okay, that doesn't happen very often. That's true too. But I'm just highlighting here that in the business, it's about your skills, but it's also a little bit about luck. You could need a little bit of luck. You need to start the right business at the right time, or you can start the wrong business, at the wrong time. You're not going to make any money anyway, but the right business at the right time will make money. The right business at the wrong time may not make any money at all, and you may lose money. And so it's really important. So this is the risky part of my business, okay? So with the other investments that I do, that I commit to, and we're talking about real estate, we're talking about precious metals here, we're talking about, I'm also invested in numismatic coins, ancient coins, get a sizable investment in that leg of my investment vehicle. And I love that, because I've been doing this since the age of probably 11, 12. And so this is really my passion, and I'm good at it, I enjoy doing it. And so the investments that I have, okay, and that's crucial, with the exception of crypto, the precious metals, the numismatic coins, these two, and the real estate too, right? These three, they're pretty safe investments. Yeah, real estate can go down, this and that, but you're always going to have rental income if you want to rent it out, right? Or you have a place to stay, you don't have to pay rent, right? So this is pretty safe, or these are pretty safe investments, right? Precious metals, during times of economic uncertainty, high inflation, historically speaking, precious metals have done well. They might not do as well this time for whatever reason, but likely they are going to do well, okay? Likely, and they have done well, so. But anyway, right? And then numismatic coins is all about supply and demand. I've talked about this too, right? But anyway, so if you want to invest in real estate, okay, again, the question is, what are you trying to get out of it? Are you trying to make money with it? Are you trying to create another source of income, some passive income? If you want to do that, you got to be aware of the whole situation, because it's not like, okay, your rent, whatever you charge your tenant, is 8% of the value of the property, right? So every year you get in 8% of the value of the property or of the purchase price, okay? This is not your rental income. It just isn't, because you got taxes, Okay, you got platform fees if you want to rent on Airbnb, Booking.com. Then, of course, you have renovation costs. You have utility costs, right? For instance, you have community fees, right? You have management fees to pay. You got to pay for the internet. You got to pay for electricity. You got to pay for water, for trash. If a person comes into your apartment and ruins the whole place, they vomit all over the sofa, or they piss on your walls, right? Whatever it might be, or they break your TV, break the desk table, whatever. If that happens, then you got to pay for that, if it's a short-term rental contract, if you're doing, vacation rentals, if you're renting out for the short term, you got to do that. And you got to pay for that. So if the volume is 8% a year, if you're lucky, maybe it's 10% a year, half of that money is gone. It's just gone in taxes, it's gone in fees, it's gone in renovation costs, and sometimes you get people in who don't pay, right? All kinds of different nonsense will happen. That's just the reality. It's not like you can charge 8% a year and that's all profit. That's just not how it works, right? And so be aware of that, because again, setting realistic expectations, not pessimistic expectations, but realistic expectations, will make sure you're not disappointed when reality kicks in and you see, okay, there are these fees to pay, there are these taxes to pay, I got to renovate every now and then, I got to buy new things, and I have to deal with people who don't pay or who stay too long, or whatever the case might be. Things happen. It's a business. It's the same as when you run a marketing agency or when you run a coaching business, a consulting business, all kinds of different things happen. And so another reason why I decided to buy real estate, foreign real estate, is because, again, of the whole bull versus bear run situation. Okay, we're in a highly inflationary period, where a lot of things have become more expensive. We're also talking about rent here, we're talking about utilities, we're talking about food, travel, everything has gotten more expensive, for the most part. Okay, so again, if you had your money in something that appreciated during COVID, let's say crypto, crypto had a fantastic run. 2020, 2021 were phenomenal years for crypto. I mean, if you bought before or during, the start of the COVID pandemic, you probably made a good amount of money, okay? So if you liquidated that position and rotated your funds into something, again, that's safe, because crypto is not a safe investment. Nobody knows what will happen to crypto, because, again, many things can happen. Nobody knows with certainty. Nobody can say, okay, I'm going to bet my ass that crypto will be around, especially the non-CBDC crypto will be around, because we don't know what the governments do, okay? Unfortunately, our countries are run by governments, not people, not by us, okay? Unfortunately, that's the truth, right? So we got to really focus on what we can control. So if you get in right before the bull run or at the very early stages of the bull run and you sold towards, towards the end of the bull run, you made money. I made money, right? And so you want to focus on this. Timing is everything. With crypto, timing is everything, unless you want to keep your money in and you believe that within the next 20 years, Bitcoin will hit 500,000. Okay, I'm not saying that's going to happen. In fact, I don't think that's going to happen. But who knows? Anything's possible, right? Anything can happen. Nobody knows for sure what will happen, where people will put their money. But what we have seen is that people are rotating their money between assets. When something's high, people sell it and they rotate it. They rotate that money. Maybe they move back into cash. They're sitting on that cash for some time until a new opportunity arises. Or some more savvy investors, they're like, okay, crypto now had its run, probably coming down. All the media hype has reached enough people, and it's time now to move into something else. So they put their money in real estate, they put their money in the bank, they put their money in precious metals. Maybe they start a business, whatever they decide to do, right? They just don't keep their money in crypto anymore, and they sell. And that creates a spiral, right? And that happens all the time, not just in crypto, the stock market, with precious metals, everything. Also in real estate, if a market is saturated, and people feel like they can't squeeze any more money out of it, maybe they're going to sell and they're going to try to buy somewhere else, right? So change is the only thing that's constant in every industry. Change, 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 change. So the question is, how can you personally profit from change in any given industry, also real estate, right? And so make sure you're really fully aware of the bull run versus bear market concept, because it exists. It always exists. And so smart money goes in, during certain times, and smart money flows out during certain times. That's the only thing that's just constant. And yeah, like I said, make sure you consider your risk tolerance. Your risk tolerance is very important. How tolerant are you towards risk? Are you a gambler? Do you have a high risk tolerance? Do you have a mid risk tolerance, or do you have a low risk tolerance, right? Depends on your business, depends what you do for a living. But like I said, you want to be safe with certain investments because you don't want to repeat this cycle all the time. You just don't want to gamble with your money your whole life. You want to have some tangible asset that you can access and profit from, whether that's for your own personal use, whether that's for investment, whatever it is, right? You want to make a return. So make sure you consider that, and you want to be safe with certain investments. I cannot stress this enough, because they're entrepreneurs, and entrepreneurs are just willing to take more risks than employees. That's just a matter of fact. We are willing, we as entrepreneurs, right? You as an entrepreneur, you as a digital nomad, you're willing to take much more risk than a regular employee living in the same place all the time, right? Working the same job, not getting ahead, working for a fixed hourly rate. So we're taking more risk, and that's why we have the option for greater reward. But once we have obtained a greater reward, we gotta also put that money somewhere, whether that's for you real estate, whether that's for you precious metals, whether that's for you, whatever. Again, you want to see what the whole picture is for you. Make sure you determine that and play accordingly. Life is different, and I always say life is like a buffet. You go to a buffet, you don't just throw everything there is on the plate. I mean, some people in America do, but typically people, they try maybe a handful of options. When they like something, they go back and they get more. Make sure you really consider that, because life is short. If you look at it day by day, it's pretty long, but once you're ready, in your 30s, your 40s, you realize that, 40, 50% of your life is gone, and, you don't have so much time to make money. And as you get older, you want to be even safer with your investment. You don't want to risk all the momentum that you gained, all the sweat equity you've put in over the past couple of decades. It's insane to do that. You can continue your business, but the money that you made should be secured, right? You want to be secure with some investment. You don't just want to have it all in the bank. You don't want to have it all in crypto. That's just foolish. Put it in things that you can access, that you personally own. And that's actually another very important thing, right? Which some people don't seem to understand because they haven't done it, or because they're, looking to sell stuff. But I just never buy an apartment in a country, especially if it's a substantial amount of my net worth, where I cannot become a citizen, where I have no legal stay allowance. So that country does not offer me legal permanent residency and unconditional permanent residency, which also does not include most parts of Asia. I would just never buy there, unless you're really convinced that you're going to stay there, you have children, you have a wife, but you don't want to get kicked out of a country, and you never ever want to put real estate under a different person's name, unless the amount that you're investing is such an unimportant amount. If you have $2 million and you're investing maybe 50 to 100,000, okay. If you think like you can lose that and you still have enough behind to make up for that mistake, great. If you feel like that's within your risk tolerance, do that. I'm not advising you to do that, but if you personally feel like this is something that I can afford to lose because it's just 5% of my net worth, it's just 8%, 12% of my net worth, I can risk a little bit here to have that home, maybe to get some other benefits. I can do that. I want to do that. That's great. But do not invest a substantial amount, and a substantial amount is like more than 20% or 30% of your liquid net worth, okay, in a risky asset that you cannot control in a worst case scenario, which we've seen during COVID, or if you cannot become a citizen, right? So really consider the whole picture, because life is short. And, I've seen people put money in things and places, like almost everything in crypto, for instance, crazy, especially if you're already older. You want to be safer, and you don't want to be working until your 70s or 80s. You want to enjoy your life too. And assets make sure that you will have options, in the future, that you can live off of your income, okay? Passive income, which is from a rental property. Now people say, oh, there's no such thing as passive income. Okay, brah, there's no such thing as passive income. Let's say almost passive income, okay? Nothing is 100% passive. Nothing is 100% guaranteed, I get it, but certain things are pretty passive. And again, this is my call to action now. If you want to buy foreign real estate for 20% below market value, then all you need to do is click on the link below this video. There's a link in the description that you got to click, and then fill out the information on the next page, and You know, there are a couple more things you need to do, but do this, please. And again, this information is fresh. I've just done it. And so I've taken good notes. I'm well structured. And so I want you to benefit from this. And I want you to go to any place you want to go. If you want to go to Paraguay, if you want to go to Eastern Europe, wherever you want to go, Western Europe, Asia, if you want to go to Asia, okay. I want you to be able to buy foreign real estate for 20% below market value. And so that's why I want to hand my proven formula to you. And this formula, again, was difficult to obtain. I paid a high price, again, my connections and everything, but I leveraged off of other people, and the information, the system applies also to other countries. And so that's the good deal. So if you want to buy foreign real estate for 20% below market value, then make sure you click on the link below this video now and continue on the next page. I see you in the next video. Anyway, I hope this video was helpful. What are your thoughts here? Under what circumstances should you invest in foreign real estate? And where do you want to invest in foreign real estate? Have you ever purchased foreign real estate? We want to hear from you. Leave your thoughts in the comments below. Subscribe now and turn on alerts to never miss any of my future nomadism, dating, and business advice videos. Thank you for watching.